there are no safe bets in this world, but if you look at the adoption rate of crypto right now, it is the fastest growing adoption of any technology in all recorded human history. Back in 1997, the internet was growing at 63% a year with 150 million users. Crypto has about the same number of users, and it's growing at 113% a year. So the network adoption of this entire digital asset space continues to grow. So not only is that the technological side, but if the central banks continue to print, the price should do particularly well. So, generally speaking, I've switched 100% of my liquid net worth into the digital asset market. And there'll be times where I'll have less of a weighting, but right now it still seems the right weighting to have. I've spoken to a lot of corporations about this, about, why do they have stuff on their balance sheet? Why do the treasurers have cash? And when you ask them, it's really for a few things. One is to buy back their shares in the US. The other is to buy real estate, and the other is to buy other companies. And the problem is the debasement of fiat currency means that all of those things go up. Their own share price goes up, the cost of real estate goes up, and the other companies they want to acquire go up in value, and their cash doesn't, because they get 3% return on their cash. So trying to get people to shift and realize that if you want to keep up with the appreciation of assets with your cash, because everybody's income is staying roughly the same, they need to start making this shift. So yes, I totally agree that it's sensible. Just depends how much risk you want to take.
Okay. And as a part of this adoption, we see many investors who want to invest into the crypto scene or crypto market, but not via token or wallet. They prefer traditional regulated securities like the futures or the Bitcoin ETF now. And what's your take on this? Do you see more the chances via this traditional bridge, or do you see more risks that the state is will come too much under control the crypto market under the state?
I think that the traditional methods of gaining access, particularly things like the Grayscale Trust or the futures market, have another risk, which is they trade at a premium or a discount to the underlying tokens. And I don't think people understand that risk. And I think it's a little bit unfair to force people to take that risk. Now, there is an ETN in Europe for Bitcoin. There's an ETF in the UK that just launched that holds Bitcoin spot. That's much better. I think regulation is going to meet us where we expect, which is going to allow people to do this. They're just trying to get comfortable. I mean, regulation is very far behind in the space. But, countries like Switzerland, Singapore are leading the charge here. I think we'll see the same coming out of Dubai. And I think eventually Europe will start to figure out, okay, what is the right strategy here? And I don't think it's going to be about blocking access. It's going to allow people to understand what the risk is. Because a lot of this space is really like VC investing. Now, traditionally, unless you're a wealthier person, you're not allowed to invest in VC, which doesn't really wash in this day and age, particularly with a very skewed younger population from the millennials. They want access to attractive rewards with equity markets at all-time record valuations, property at record valuations, bond yields at all-time lows. Their opportunity set, and real estate super expensive, their opportunity set is very low to generate future returns. And crypto is the market that they really, really are interested in. So it's quite difficult for politicians to go against such a large group of voters. So it's really interesting. There's a battle to be fought about regulation, but I think a grand compromise will be reached that will keep everybody happy, allow KYC, AML, and all of the things that the state organizations need.
Okay. And what's your guess? When do we see a spot Bitcoin ETF in the US?
I think it comes out sometime next year. I mean, there's a lot of pressure on the regulators from everybody to say, listen, what you're actually doing with the futures ETF is increasing risk. So I do think we'll get there. Everybody's working really hard on it. My guess it happens next year. So I think we'll see probably an Ethereum futures ETF at some point, then a Bitcoin spot ETF, and then eventually a Ethereum ETF as well.
Okay, cool. So maybe let's stick to regulation or aspects of regulation. And we currently see tough regulation this year in all major countries to the crypto sector. And aren't you afraid that the states will regulate crypto innovations to death in order to keep control and maybe also to keep the banks safe?
They will try. And as I said before, it will be a battle that will not be finalized, probably in, let's say, till 2025, when we'll eventually have a set of digital asset laws as opposed to using the existing infrastructure. So there is going to be, I think, the feature of the second half of 2022 into 2023 will be regulatory uncertainty. Obviously, for institutions, it's relatively straightforward now. Most of them have an ability to buy Bitcoin and other things. It's the battle is for the retail market and the launch of the CBDCs out of the central banks. You know, Europe wants to get theirs launched whenever they can. The US is working on it, but is further behind. India is about to go. Singapore's about to go. Everybody's about to launch theirs. And what they want is to get everything in order while that happens, because what they're creating with the central bank digital currencies is not a competitor. They're creating the digital on-ramps and off-ramps. So they want to make sure that they capture what they need, which is their tax take, and to understand the KYC, AML elements. So I think DeFi's got a fight to come as well, because there's very limited KYC and AML, and that will be imposed in some way if you want to onboard and offboard via the central bank digital currency.